Some people became millionaires with crypto, but many lost everything. This video breaks down how crypto can create huge winners and why many others fail. First, we'll look at the potential rewards that attract investors, then the volatility that threatens portfolios, and finally practical ways to manage risk. This isn't financial advice. It's an educational guide to help you understand possibilities and pitfalls so you can make smarter, more informed decisions. By the end, you'll know why crypto can create rapid wealth, why it can evaporate faster, and exactly what steps reduce the odds of ruin. We'll use real examples, simple charts comparing gains and losses, and clear risk warnings so you can see both sides without hype or fear-mongering. Let's begin with the part that captures headlines. Extreme upside and stories of life-changing gains. Understanding that upside is essential before any decision. Cryptocurrency can produce extraordinary returns. Early investors in some coins saw gains of thousands or even hundreds of thousands of % in a matter of years. These gains happen because of rapid adoption, speculation, and network effects. A small initial market cap can explode when large numbers of buyers pour in. Stories of young investors buying early and becoming wealthy are real. Those stories fuel interest, attract more capital, and sometimes create feedback loops, pushing prices higher. Beyond headline gains, crypto also enables new business models, token economies, and decentralized finance that can create real economic value over time. But potential reward is not a guarantee. For every massive winner, there are hundreds of tokens that fail, vanish, or become worthless. So while the upside can be breathtaking, investors must weigh that possibility against the high likelihood of loss for many projects. Volatility is the defining characteristic of crypto markets. Prices can double or halve in days, driven by news, sentiment, whales, and technical flows. Quick chart animations will show examples. Massive rallies followed by steep sell-offs. Those swings can convert paper gains into real losses in moments. Volatility magnifies both profit and risk. Leverage or margin amplifies moves, making gains larger but making losses catastrophic if not managed carefully. Market structure differs from stocks. Crypto trades 24/7 across fragmented exchanges, increasing the chance of sudden price gaps and liquidity shocks. Emotional reactions are common. Fear and greed can push people to buy at peaks and sell at bottoms, locking in regrets instead of gains. Understanding volatility is essential before risking capital. It defines your time frame, your position sizing, and the psychology you must maintain under pressure. Risk management turns volatility from a hazard into an operational factor. It's the difference between survival and ruin in turbulent markets. Start with position sizing. Only invest what you can afford to lose and define a clear percentage of your portfolio for high-risk assets. Use stop losses, scaling, and diversification. These tools limit downside and give you a plan to act without emotion when markets turn violent. Avoid excessive leverage. Margin multiplies returns and losses. For many, trading without leverage or with minimal leverage reduces the chance of catastrophic wipeouts. Prepare for tax and security risks too. Secure keys, custody choices, and tax planning matter as much as market strategy for long-term outcomes. Risk management is not optional. It's the mechanism that converts possibility into a sustainable approach to participating in crypto markets. Research is your best defense. Examine project teams, tokenomics, real use cases, partnerships, code audits, and community strength before committing funds. Use multiple sources. Read technical documentation, follow reputable analysts, and verify claims. Beware of hype, influencers, and paid promotions pushing coins. Look for clear value propositions. Ask whether a token solves a real problem, has sustainable demand, and can survive competition and regulatory pressure. Remember liquidity and exit plans. No matter how promising an asset seems, you must be able to sell or move funds when needed. Final warning: never invest money you cannot afford to lose. Cryptocurrency can make fortunes, but it can also destroy savings without warning. If you're interested, start small, learn relentlessly, and build a plan. Research thoroughly before investing. Do your homework before risking a single dollar.